Welcome to Game Plan Sunday. Today is February 9, 2020. It's our Game Plan stock market strategy session. We're going to cover what occurred over the markets over the past week, what we noticed coming down the pipeline, and how can we use that information and leverage it so we can make some money in the markets this week. So, pretty interesting week. Me, myself, coming back off a small little vacay with the family in the mountains, coming back to the markets. It was pretty interesting. So, I would say that this week was probably a very victorious week for Donald Trump. Okay. You got to remember, he got acquitted off of the whole impeachment situation, which if you guys been following us for weeks, you already knew that wasn't going to stick because the markets tell us, the money didn't move. If the money don't move, it don't matter what they talking about in the politics stuff, ain't nothing going to happen. You feel me? If you see the stock market sell off, then I mean, they got some dirt on them. We already knew what the outcome was going to be, but I know there's some people that were hopeful. But if you're not paying attention to the money, I don't know what to tell you. So anyway, that came into fruition as Wallstreet was already pricing in that nothing was going to happen to Trump. The Senate was going to, do what the Senate was going to do. That was a no-brainer. Trump had a pretty powerful State of the Union speech. And of course, he bragged about the economy. That's to keep everybody hopes and, attitudes positive about the market so we can keep money pumping into the markets. Also, China rolled back tariffs on some U.S. goods. Now, that was very victorious for Trump because, what Trump is doing is, this is a power game here. We're at war, okay? You got different kind of wars. This is a war. We're at war, but they're doing it through trade. We don't want to go into, shooting and killing people. But this is still war nonetheless. So we just remember we had the coronavirus. You guys remember we've been there before. The Chinese Lunar New Year is, again, this is a big year, okay? I broke it up to one of those little Game Plan Sunday snippet videos. If anybody go back and check out the little 3-minute videos, if you didn't have time to watch the whole Game Plan Sunday, you can catch that segment from there. I'm trying to slice and dice some of the good points from these, from these videos in case you guys can't catch it. But basically, the Chinese Lunar New Year was a pivotal point for the Chinese markets. It's a lot of money that gets pumped into their market. This is like Christmas times 5 for China, okay? They have it every year. A lot of money get pumped in. And so investors was expecting to making a lot of money. But the risk that nobody could calculate was the coronavirus. Coronavirus just popped up, okay? It's crazy. It just pops up the week that Chinese, investors was anticipating on making a lot of money. Investors, period, looking to make money in the Chinese markets was looking to, make that happen. Remember, we also had the U.S. trade deal with China phase 1 that went through as well. And a part of that deal was not just to save farmers, but it was also to give U.S. investors access to the Chinese markets. Y'all don't remember that, okay? So that part of the phase 1 trade deal was for U.S. investors to have access to the Chinese markets. China is out of here, okay? China, there's no catching up to China, all right? So China is booming. U.S. investors want to get a piece of that. U.S. markets is slow, okay? Just point blank period. So that's another part of the whole situation. So again, a lot of money was expected to come in, but the coronavirus shows up, right? Out of the blue, whatever the reason, whatever the cause, I really don't know. There's speculations about that as well. Did the U.S. plant this biological warfare, agent in the system to negatively impact Chinese markets? Why does that benefit the U.S. to even do something like that if we have the capacity to do it, right? Why? Because we want to pressure them into a trade deal. Well, again, that's what Trump wants. You making a deal, you want to have, leverage. You want to be able to negotiate so that you have the upper hand. And so if they are weaker, then you actually you'll have a better chance of getting your way. We just watched a movie last night. I think it's called A Gentleman. I don't know if my wife is in, she'll tell you, but we just watched this movie last night. It's with Matthew McConaughey. It's a new movie. It's a British gangster movie. If you're into those things, watch it. It's pretty cool. That's the same kind of scenario. This one gangster, he's trying to hurt this other gangster's, business profile by having somebody to, antagonize his business so that he can come and buy it back for cheaper. I mean, it's the same kind of scenario here in this thing. So that coronavirus thing hit, and then it messed up a lot of money. And it's starting to weaken the Chinese economy, okay? Because it's a major, major hazard here. And next thing you know, we now see China rolling back tariffs. So now you can say U.S. has the upper hand in this trade deal right now. But China's working really fast to get this coronavirus situation put together. Don't know how well it's going to go. Now that this new risk is in here, I don't know if they can contain it. Maybe they can. Maybe they can. We'll have to see. So that's what happened this past week. Also, we did have the job numbers that came out. So the job numbers blew the estimates out the water. 225,000 jobs were added to the economy. Now, you guys got to remember, those numbers are not just black and white. They have dimensions to the numbers. So a lot of those jobs, again, low paying jobs, and not even high paying jobs, but jobs nonetheless. But keep in mind, they always revise the job numbers. The stock market moves off the print. They never, move off the revisions. And if we take a look back when I was updating my numbers tonight, I was seeing that, they revised all the previous months, the previous 2 months, they revised the numbers down. So they always go down. So 225, very optimistic number, more than likely is going to get revised down. So, but nonetheless, this is a good feat. And it sounds good for Trump and what he's trying to do with re-election. He's going to be able to paint all these numbers so he can win a victory off of numbers alone, basically. That's pretty much it. What happened on, that main front for last week. So I have the yield curve chart up here, as you guys can see from my Tableau platform. And this is on our website too, so you guys can get that. If you want a link for it, let me know. We'll post a link. But the yield curve inverted again. All right, so this is important to understand what's going on. All right, so the yield curve inverted, and when that yield curve inverted, it was right here. So I just want you to see where it's at. It inverted here. It popped back out, but it's still inverted nonetheless, and more than likely it's going to invert again. Okay, so remember, this was all inversion back here. This is the first one. So we see in a very similar situation. That was the first one. We had this long 6 months, of inversion, and then it popped out pretty much. I think it was about 6 months. I can't remember. But then we had it pop back out, and then it inverted again last week, and then it just popped back out at the end of the week. That's interesting because, again, the recession risk is back on the table. When that inverts, that's, recession is coming. It's letting you know recession is coming. We don't know how soon it's going to come. Now, just taking a look at all the different variables that I'm looking at, with the Feds pumping money into the market, as much as they can to try to save this thing, I don't think they will get a recession in 2020. Maybe 2021 after Trump secures the 2020 election. And then also keep in mind, if you looked at the World Economic Forum, Secretary Treasury Steve Mnuchin was talking about, they're getting ready to roll out tax cuts 2.0. And that's another thing, you got to remember, the Feds is really low. They really don't have much ammunition to save the economy. They don't have 5 points to give the economy. Only got 1.5. That's what we're looking at right now, these interest rates. They only got 1.5 to give. They don't have enough. And they've been telling them, hey, it's up to fiscal policy. And they say fiscal policy, they're talking about government. They're talking about, hey, Congress, president, whoever, y'all got to do tax cuts, whatever y'all got to do to save this, because we don't have enough. We're trying to reserve what we have for when the time actually comes, we can, deploy it at that time. We don't want to go to negative rates. No matter how much Trump says, oh, let's go to negative rates, like nobody wants negative rates. It's terrible. And this is part of the reason why the stock market is continuing to go crazy high, because the yields, these treasury yields, this smart money, when you're looking at the yields, these are bonds, okay, bond yields. Smart money is in the yields. You want to know what's going on in the future, you got to pay attention to the bond market. They're like the wizards, okay? That's all big money in that, okay? So these guys around the world, they're buying negative interest rates, which is ridiculous. It's like retarded. It's nothing that you're supposed to do. And the only place you can get positive yields is, the U.S. bond market, basically, right? But inflation is high, so it still doesn't even make sense to even buy. Like buying bonds doesn't even make sense right now. But they're still doing it because they're anticipating for this to get worse. So it's crazy. It's just a really nightmare. We don't have time to talk about that right now, but it's just not good. So risk is on because you need to get yield. So the best place to get yield, the best, bet in town is the stock market. Is keep going up as long as the Fed is pushing it until they overcook it. When they overcook it, that's going to be a big problem. Now, we haven't seen that happen just yet. The markets haven't turned over, so it's still some left in the tank in the stock market side. The Fed's is still feeding the repo markets. Now, remember, I believe it's this month that they're supposed to be trying to roll out. Now, that would be a major problem if they do so. I don't think the markets are going to let the Feds try to remove the balance sheet or reduce it. Not at all, because they're already in, and they're going to expect them to keep on feeding the habit. All right. So that's big level information to understand. I just want to show you guys where we are here with the cycle, because when we were here on the yield curve, everybody and mom was talking about the recession. You know, they had to do what they had to do. The Feds jumped into the markets and silenced all the recession, talks. Let's get the confidence back in the markets. It pops out inversion, and then the markets continue to go higher and go higher because it's like, okay, now you can stop talking about that in the news headlines, get people, talks off of this. Now this thing comes back down and inverts again, recession talks is going to be back on. That's not going to be positive for the market. So again, you got to remember the markets is all about psychology. It's not just money. It's mainly psychology. That's why Mindset Mondays, if y'all on the Instagram, make sure you check it out. I'm just kicking out the knowledge, kicking out the wisdom for you. A lot of this is psychology. So as long as the people brains are optimistic, they're going to keep on spending money. They're going to keep on investing. When people get scared, they're going to start saving money or hoarding, their money, not investing, not putting it to use. That's what causes the markets to go into recession. So just keep that in mind. I just want you guys to see where we are with that. Bingo. Let's see here. All right, cool. So big talk last week. Had a lot of talks about Tesla. Everybody and their mama want to know about Tesla because Tesla was popping like stupid, crazy, dumb, right? And there's just nothing to really justify this move in Tesla. If you guys been following Tesla, for years, some of the big investors. I mean, this stock itself is very volatile. The year prior, we made a lot of money off of shorting Tesla. Tesla has made a turnaround. As far as they were going negative, and they're finally able to generate, some positive cash flow here, but they burned through lots of cash. They burned through a lot of cash, and until you see everybody named mama driving a Tesla, I just can't believe the hype. So again, all of this is hype. All right, Tesla's doing some good things, but everybody named mama still can't afford a Tesla. So I mean, it is what it is. He got the new truck that still got to drop, but you guys know how. Just don't believe the hype. If you made money off of this, that is phenomenal. This thing right here is looking like the Bitcoin chart. But you remember when Bitcoin made his fall, that parabolic move like that? Whenever stuff looks like that, I stay away from it. Now, you can play if you want, but it's just it's dangerous. Imagine you're the person who bought in right here, right? Now you're holding the bag. You down 200, 300 points. You feel me? That's what happened when you chasing the crowd, man. Like people, I wish I would have bought this. I wish you would have did your research before you stop following the news. A lot of people follow the news. You got to get away from the news. That's why we follow the charts. You feel me? Stick with the charts. All right. So I just wanted to just show you guys this because I know that we had a lot of people asking about it. And no, it didn't come on my radar. If there was a play, then I would have did it, but there was no plays for me on this one. It just did what it did. It defied a lot of odds. It, superly overbought and continued to get overbought like by the day was just crazy. And so anyway, it's like a bubble. You see a little air coming out that bubble now. So, excuse me. That's what we saw on Tesla. Let's cover the broader markets right now. Just take a look at the S&P 500. All right. So S&P 500 again, we got this hurdle up at the top. All right. We got this top up here. And again, this is a hurdle at this top. Looks like it's kind of forming a double tops, if you ask me. We'll have to see how it goes. See it's, retracing off of here. It's coming onto his mean. Even right now, as we speak, you guys can see, the futures markets is down right now. And actually, before I went live, I mean, the Dow was down, I think, 180 points, actually. And the NASDAQ was down about 60 points. So I didn't know what was going on there. If you guys know what's going on, let me know. The markets are down now, starting to, calm down a little bit. So whatever it is not that bad. But it looks like we got some risk on somewhere. So maybe a down start to the week this week. To the markets this week, we'll have to actually, follow up and keep tabs on it. Nothing really clearly sticks out to me at this point, though. If anything, always keep your eyes on the Russell. The Russell pretty much leads the markets. It's like a leading indicator. It normally moves first. The rest of the indexes, the NASDAQ, the ES, they move afterwards. All right. So we got the Russell right here. And again, these are the small cap stocks here. And I mean, just taking a look at the Russell, I mean, it's been the slacker of it all. The NASDAQ and the ES has been moving, but the Russell has not. And it really struggled right here. And it got rejected at that resistance. So we're seeing it also trading under the non-moving average right now. So this is going to be an interesting point. And I would like to get some short exposure in here. Yeah, I would like to get some short exposure in here. Taking a look, I got the Russell over here on the side. Like, you know, a couple of names that's in there. Let's see. Like stocks like John Deere, you know, Caterpillar. These are some names that I would like to play to the short side. And this is the reason why. I mean, if you're looking at the daily, you're not going to catch the whole move. But what you need to see on the daily is that the price is moved up against the moving averages. There's a cluster of moving averages up ahead, all here at this level. And price, although it rebounded here, come up above the 200, boom, it got capped out at the 100. Okay, so those three candlesticks, none of them have actually cleared this moving average area. All right, so that's key to see on the bigger time frame. As we dial in on the smaller time frame, this is what I want you to see, and this is the reason why I'm looking at this to the short side. All right, so clearly the stock itself is overbought. It's in an overbought territory. We got a sell trigger right there that says, hey, sell, sell. All right, resistance is up ahead. Okay, we still got these two layers of resistance. It clearly has struggled with trying to clear that, and it has not cleared it. It can't clear it. I got a sell trigger that says sell here. And for that reason, for the immediate term, I would like to see it come down, you know, a couple of points there, about 4 or 5 points. See if it'll solidify somewhere around there. It could go even further. But that's enough, you know, money to make, you know, some, that's enough movement to make some money for the short term. Okay. But yeah, I mean, again, if this thing can get rejected, it can come all the way back down, you know, to the 200, you know, expected to come down at least to the 9 and then the 200 afterwards. Right. So that's what I'm expecting. To the 200 is my main target. But that's to get some short exposure in, you know, this whole situation with the Russell. That's what I'm looking at there. Caterpillar, again, he got a couple of names here on the sidelines you guys can check out. You see, as I have them sorted out, these are the ones that's in the Russell that's really not performing pretty terribly. Humana. I'll stay away from Boeing. Not too sure how that's going to play out because there is a squeeze setup that's in the defense sector. In fact, let me just take a look at that real quick. I haven't really assessed that one, but I remember there is a squeeze. We do have a squeeze on the defense sector, and this is going to be interesting to see how this plays out. Pretty interesting to see how this plays out because there is a buy trigger here. We got a couple of levels in here. Let me just remove some of this. All right. So if you take a look, you know, here was a buy trigger, and we saw that movement went all the way up there. This was a buy trigger here. We saw the movement go all the way up that way as well. Now we got another buy trigger here. That's interesting because it has a squeeze there. Okay. And so it does have resistance up ahead, but if the squeeze fire long, then that'll give it enough power to push through this up ahead resistance. Okay. So this sector here, I mean, you can, of course, you can play the whole sector if you want. That's XAR, or you can play some individual names. So because this is a bullish squeeze setup that's in here, let me just see what the expected move is on this thing real quick. In fact, let me see if I can get some Voodoo charts, if I got Voodoo on there. Okay, I don't have Voodoo lines on these. But if you look on the line chart, it's a little more cleaner for you to see it. But yeah, so I mean, at least about 120, you know, I'd say about 120 points up here, $120, that's about 3 points that I can actually see. Could give us some more, but if this thing fire long. So that's why I was like, okay, stay away from short and not Tesla, but Boeing because of that. All right. Let me see the expected move here. It's about 4 points, 40 days. Okay, so yeah, that's pretty close to what we're looking for. All right, so again, that's something to watch out for in that sector there. What else we got? Again, if risk is on, gold is still in play, and bonds also in play. So actually, let's take a look at bonds real quick. Really don't know how much movement we're going to get out of bonds, but as we saw bonds coming off the bounce, okay, this was the move here. You know, this is the move in bonds. It came up, got rejected, found this floor, popped back up, excuse me, and then it looks like we're actually going to try to retest this level of resistance again in bonds. All right. I believe gold is probably similar. Let's take a look. Let's look at the gold futures here. It's interesting. I don't see any catalyst that should actually make gold pop any higher right now, unless we have more risk. Okay, this coronavirus thing gets out of hand more, then yeah, I mean, gold is going to be the thing. I really don't know. That's the only risk factor that I can see that I know of in the markets. Because again, economic data this week is going to be pretty light. We got earnings from a couple of names, but they're all like low brand names. There's nothing really major. We got all the big boys out the way. I'm not really seeing too many risk factors up ahead that will give me the notion of that, unless this coronavirus, gets worse. It's the only thing I can see so far. Or I think Powell is supposed to be speaking on Tuesday. He's supposed to be giving some kind of testimony to Congress about monetary policy, but still, I don't think that's still bad enough to, rock the markets. So I don't really see anything for that. But as we look at the charts, gold is still up. So I think gold is still a play. There's a buy trigger that's here. The squeeze is on. There's a short fire. It looks like it's trying to fire right now. I'm not too sure, but it is above its moving average, the non-moving average. I got a couple of, resistant barriers in here, but the main one is to look at is this 1598 to 1600 line here. Gold, I believe, is going to try to retest it. Same way it did that. It's going to come back up and try to retest this barrier again. If it gets rejected, it gets rejected. If not, then you'll see it move higher. It's very similar to what we saw in bonds. So that's if risk is on, if things deteriorate, or Iran retaliates, or North Korea acts up, or any kind of risk that would bring shock to the market, straight up buying gold. The VIX, let's take a look at that real quick, and then I'll take some from you guys because I know we're limited on time. All right, so here we go with the VIX. For you guys that don't know, this is the fear indicator. When this thing goes up, that is bad news for the markets. You better sell. Okay, so that's what that is. The red line, we've been tracking this for a while. This is my tried and trusted true levels. This stays. And the market behaves to my Fibonacci level here. All right, so this is clearly the lows. We were tracking this. Again, we called it before. Here we go. Boom. We got that trigger that fired. It was in a squeeze too. Remember that? Boom. That squeeze, it fired. Bingo. Levels are all the way above. Now it's coming down, starting to calm down, but I believe it's going to probably stabilize here. And let me just take a scale back and show you what I'm looking at. And again, whenever this is above, these moving average level, that's risk on. That's risk. All right, so we just take a look at a longer term time frame here. I just want to show you guys this real quick. When we got the squeeze, which is the red dots, and we get that fire, bingo, shoots to the moon. We had a squeeze in there. That first green dot is the fire. Boom, shoots to the moon. We have another squeeze set up. This squeeze setup looks like this squeeze setup. All right. It hasn't fired yet. Still hasn't fired yet. If you take a look here, when it came down, it hovers this floor. And then it got this pop up. Okay. Now it's not, it's still, it fell down just a tad bit, but it's still above the moving averages. All right. So, and again, I believe that when this thing fires off, we are going to move higher. I don't know what the catalyst of that would be. We can't see that, but just looking back here in the past, that squeeze setup is on. So that's risk on. Again, I don't have the exact catalyst. I don't know what it is, but just looking at the chart itself, the chart is telling us that, hey, something is brewing. Okay. I don't know what it is just yet. It could be the election. Who knows? Right. It could be anything. But the only thing I can think of right now is coronavirus stuff, terrorist attacks, Iran maybe trying to retaliate, North Korea trying to launch missiles or something. That's the only thing I can really think of right now. If you guys think of something else, you let me know. The other thing is the feds, they shoot, because I think we got CPI numbers coming up this week. I still don't think that's going to be enough to move these markets. The CPI numbers are going to be here about inflation. If the feds cook the economy, that wouldn't be good. But either way, this is something to be careful about. All it says right now is to be careful, tread softly, make sure you hedge your bets. Don't get too crazy out there. You've seen a lot of people trying to make crazy money off of moves like Tesla. But when I tell you Tesla is a very volatile stock, if you can't stomach the moves that Tesla makes on a daily basis, then you don't need to even plan that, because the same way it move up, the same way it can move down. So you really got to be careful with that. So, but yeah, so with the VIX, and then again, this is the bigger time frame, a weekly time frame. It just says to me to tread softly. For me, any setups that I see will probably be spreads. Probably wouldn't be trading long calls and long puts because it seems like risk can pop up any time right now. Not too sure what that would be, but just keep your eyes on that. All right. With that being said, I'll take some setups from you guys. If you got anything that you want to look at. Also, man, it's interesting. You guys know that I'm here in Charlotte, North Carolina, right? And in Charlotte, North Carolina, I'm in a pretty nice place called Ballentine. It's kind of like an upscale, place. And we have nice groceries and things like that. But an interesting thing that happened this week was when I came back from the mountains, the grocery Earth Fair. This is a place that I shop at all the time. And I normally it's a healthy food place, natural foods and things like that. But I normally get my alkaline water and things like that from this place. But anyway, they announced that they were shutting down all their stores, right? And it's just crazy because this is an affluent neighborhood. So if you're gonna make money, if you're gonna have a store, you need to have it over here because this is where the money is at, right? And the interesting thing is that they haven't been making money, and so they're shutting down. And so the day that the news was announced, I believe that was Monday or Tuesday. I can't remember, either Monday or Tuesday. I went to the store because, again, I go there every week to get my alkaline water and natural honeys and stuff like that. And so when I get there, there's an older Jamaican guy. He's maybe 60 years old, and he's working in the back and, asked if he could help me out. And I was like, yeah. And I was like, man, I heard about, the news. It's sad to hear. And he was like, yeah, that's really messed up. I'm upset about it because I just showed up to work today and my coworkers are just talking about it. And he's like, I just found out I don't have a job. Like, I'm like, that's pretty sad. You just show up to work and you don't have a meeting. They don't have a meeting. They don't tell people in advance. You just cut people off. That's just crazy. Like, but yeah, that's what happened to Earth Fair. And so also while I'm in the grocery, there's a PM of their competitor that's in the store. And she was just talking to me. She was just like, yeah, they're going to be looking to liquidate this really quick, like this week. So the sales are going to be like 50 to 75% off. She was like, we're in town trying to recruit some of that talent that they're letting go. And, because the economy's got to try to get those people jobs. There's a lot of jobs that's going to be missing from that. And so I just thought that was interesting. Make sure that you pay attention to your social indicators. This was all that it's about. That's why I'm talking to you about these things, because one side you see the numbers, and then the other side you need to see certain things in real life. Like I said, if the move in Tesla is that real, you'll see everybody and their mama with a Tesla. I don't see that yet. So that move is still not justified in that. With the economic data with the jobs and things like that. It's a lot of temporary jobs that's out there. We had a lot of companies that were seasonal. We're seeing the retail sector starting to come down also. There's a lot of, I think Macy's is shutting down thousands of stores or something that's like that. So it's a lot of conflicting information that's out there. When you're looking at the data, ask somebody, ask questions if you want to learn about this stuff, so you know what's really going on. So, a lot of stuff that Wall Street is bumping on is to keep this thing going to get Trump reelected for 2020. And so they move off that first print. That's not the last print, though. So just keep that in mind. And remember, right now, as we're looking at the futures, the markets are down just a tad bit. So, I probably expect us to be down a little bit tomorrow. Not really too sure, but that's pretty much it. You guys are quiet, man. Y'all had no stocks y'all want to look at? It's been slow for me, man. I'm over here trying to recover, Ron got no plays. Okay. Well, the plays, sometimes we don't have them over the weekend. We'll see them set up, get Monday emotion out the way, and then Tuesday have clearer minds. Tuesdays is normally the best days to trade anyway. Mondays can be a little crazy. As far as earnings go, we got Allergan. We have DaVita, Lowe's. That's on Monday. We got Dominion Energy, Hasbro, Hilton, Lyft, Under Armour on Tuesday. We got Barrick Gold. That's a gold stock. We got CVS, Applied Material. That's on Wednesday. We got Alibaba. So Thursday is going to be popping because Alibaba, they popping in China. So Alibaba is going to be there. Duke Energy, Kraft Heinz, Nvidia, and PepsiCo. So Thursday is going to be a big day. So just keep that in mind. Big names is popping on Thursday. There go my man Dustin. Walmart. Yeah. So interesting because I just mentioned what CVS is coming out with their thing. I don't know if you've seen what is it, Rite Aid, and I believe this is an interesting one. And this is a $13 stock. It does have options on it as well. There's an interesting setup on here on Rite Aid. It's got a buy trigger right here. We got a squeeze, and we do have the trend that's moving up. And so I do like Rite Aid to the upside, at least to the $15 mark here. So I do like that one to the upside as well. Just keep that in mind. What else we got? Dustin says Walmart. Yeah, so Walmart, I think, is also an interesting one. So it's still in the squeeze here. And I believe that Walmart has the potential to push through this here. We have to see, though. As you mentioned, Dustin, yeah, we definitely want to see it clear this resistance here. So you can eye it, on the intraday chart. If you clear that resistance, then, boom, the upside to the $120 is very realistic. It's not in overbought territory, so it's a good zone there. So still a good zone there. So yeah, I do like it. I do like it at that to the upside. If we could have got into Walmart here, it would have been better to catch it off the 200, off that bounce. But it's still cool. Like if you bought in here at this level, that was great. Because then you still ride, especially if you got a spread and you're just making money right now if you bought a spread. If you bought the calls, then you'd be getting ate up right now. But yeah, that buy trigger's in there. We got to see if it's going to clear this resistance here. So we should get that signal tomorrow to see what that does. So it's right up against it. Let's see how that performs. What else? You say you still holding GFI? What is GFI? Don't know what this is. Okay. Goldfields. Okay, so it's a gold stock. It's a little cheap one, huh? All right. This is a penny stock, though. So I'm not too sure if my work normally is for like blue chip stocks, but it may work on this one. It does have some defined highs and lows in there. It is a bullish stock, so definitely like it to the upside. We have a squeeze that's on there, and the trend started to shift that way. Now you do have earnings coming up, so I don't know if you're trying to hold this for the long side or if you're trying to make some quick plays. But what would be ideal is to see it come up, hit this target, and you get out of it at that level before earnings, because there's no telling what's going to happen with earnings. So That's what I see on that. When is earnings anyway? If it shows me. Okay, on the 13th. Yeah, so the 13th earnings on this stock here is on the 13th. So, if you have a play in there into the 13th for the short term, then yeah, you could definitely make some money on that. All right, gang, that's it for Game Plan Sundays. Remember, it's going to be a pretty light week as we've already gotten the big dogs out the way for earnings. However, we still have earnings nonetheless. So we're going to have some smaller names that's going to be in the play. But Thursday is going to be a good day to remember because we're going to have Alibaba, which is a big dog. We have Nvidia, which is a big dog. We have Kraft Heinz, PepsiCo, AIG. All of those names are going to be reporting on Thursday. So definitely keep your eyes and ears open for Thursday. Also on Thursday, we're going to have the CPI numbers. It's going to give us insight into inflation. We've been tracking this thing, trying to see what's going on with inflation. Are the Feds cooking the economy or what? So that's going to be a good thing to remember. Also, Fed Powell will be reporting on Tuesday to Congress about monetary policy. This may have an impact on the markets. It just depends on, what's revealed. I think that the consensus is that everything is going to be A-OK. So as long as everything is A-OK, we shouldn't see anything from that. But that's all you guys need to know. Also, make sure that you get the Intro to Options Trading book if you already haven't gotten it. The links are in the bio. If you need any help with getting your hands on my new book, just let us know and we'll get this into your hands, okay? Other than that, you guys have a good week. Check out the rest of our videos. Peace.